So just learned something pretty important about a return of capital. So when you get a return of capital, because it is an actual return of what you've put in, it's not considered a taxable event. So all the return of capitals I got before now didn't count towards like dividends received, like income received. So it doesn't count as tax until your cost basis has gone down to zero, and your cost basis is what you put in, what you originally invested. So say you put €10 into any stock and you received a return of capital of €1 every year. That would mean that after 10 years you would have received your €10 back. You wouldn't have to pay any tax for those 10 years. But as soon as you've received what you've put in back, then it starts counting as tax. So now, thankfully, I've only received about €70 in dividends, like in total. So it's not that much at the moment. Obviously, I wish I knew earlier, and there's probably a lot of this that wouldn't have had to have been taxed, but I'm not going to go down through hundreds of days of dividend payments and buying and selling and all the history just to save a few euro. It'd be a waste of a whole day. So I'm just going to take the hit, learn the lesson, and from now on, so say Chimera, I got a return of capital today. So this column is for the money that's invested. Let's say it was €2. So this is the amount that they paid a return of capital of, but I received like 6 cents or something. So instead of putting that 6 cents over here, which is what I've been doing, it should be over in this column as minus 6 cents. So that I know that I've put in €2, but 6 cents of it has been returned to me. And I don't know about these ones. Like this whole column is since the start of the portfolio, so it was like July of last year or something, and I'm not going to go back through, like it's pretty empty, so I'm not going to go back through all of those days. I'd have to click on every individual payment in the platform to see if it's a return of capital or an ordinary dividend. So it's a waste of time, like for literally the sake of a few euro. So I'll just do it slightly differently from now on, but yeah, that's a new one. Return of capital doesn't get taxed until you've received your original amount back in full, which will take a long time, of course, but eventually it will get there, and it turns what you've put in. Say it was €10 into a stock, you received a €1 return of capital. You still have a €10 position, but that €1 now turns into cash in your account, which you can put somewhere else. So it's good. But yeah, it's a slight change of how I can log everything now. Obviously, wish I knew it earlier, but what can you do?